Welcome to TS Lombard. I'd like to highlight our outlook for 2018 for emerging markets, but I'd also, before I do that, just have a quick review of how we did last year. That is to say, this year. From the beginning of the year, we had a strong positive call on overall risk for EM. We got a little bit scared in February and March with some rhetoric out of the White House, so we went to neutral, but for the rest of the year we had a positive call, which was the right call. In terms of our asset allocation, we had our top call on equities, which clearly proved to be the best call. Emerging market equities on balance up about almost 30% this year. In terms of asset classes, other than equities, we've also had a positive value added on sovereign credit and on currencies, although we had more difficulty in terms of timing. Where did we miss the calls? Number one, on Russia. We took a positive call on Russia a little bit too soon, because we had the Russian scandals break out in the US and Russia assets underperformed during the first half. It's come right during the second half, and we still have a positive call. On Mexico, we mistimed the negative call on NAFTA, and we saw a couple of periods of strong recovery in Mexican assets at a time when NAFTA was struggling. And lastly, on South Africa, we generally had a negative view, which was overall the right view, but we missed the timing from month to month. So it was mostly related to the timing that we had a problem. But overall, we think we had the right overall view in terms of equities. With regard to 2018, we think the key driver for 2018 is strong, synchronized global growth, and this will cover up a lot of misdeeds in terms of domestic monetary policy or fiscal policy, and we have a positive outlook for the year. In terms of where do we see the best calls, number one, on equities, our top two calls are China and Russia. China, because we think that the transition to a somewhat slower rate of growth will prove positive for equities. In Russia, we think that the relative compelling valuations in the absence of new upsets will be positive for Russian equities, and the country is moving into a fiscal surplus. In terms of credit, our top calls, number one, starting with Russia. Number two, Mexico. We think Mexican economic fundamentals are very strong, and we think that this will help underpin continued recovery of spreads for Mexican dollar bonds. Moving to FX, our top calls, number one, not surprisingly, Thailand. Thailand, the baht has been very strong this year. We think it's probably going to continue to be strong because the country is running a huge current account surplus, almost 12% of GDP. Our second call would be Mexico, because we think Mexico fundamentals are very strong. We think the currency is currently undervalued. And we think whatever happens with NAFTA and the elections, people will realize that the Mexican outlook is not going to change very much. It'll be quite positive. Lastly, on local rates, our top calls going back Russia. So Russia is pretty much positive across the board because inflation has dropped quite dramatically. Rates are still coming down. The country is moving into fiscal surplus, all of which is very positive for local rates. And lastly, Brazil. Inflation is at the bottom. The easing cycle of Banco Central is almost at an end, but still probably has another 50 basis points, reducing the policy rate below 7%. And we think that local rates will continue to outperform during an environment next year, which is likely to be quite volatile because of the upcoming election. So overall, we think the picture is positive for emerging markets, and we continue to favor, among asset classes, we continue to favor equities. Thank you.